Hey, I'm Patrick Huey, certified financial planning practitioner, and today let's talk about the government shutdown. The headlines, the anxiety, the questions that are swirling about what this means for your nest egg, your benefits, and your financial plan. Well, let's start with the good news right up front. Most of us have been here before, like a lot in previous years. And yes, most of us have come through these things just fine. Even so, it's not lost on me that uncertainty can shake your confidence, even if it's just for a news cycle or two. So today, I want to cut through the noise and share 3 essential things that you need to know about your investments, your benefits, and your planning now that we've begun a government shutdown. Today, we're going to keep it factual. We're going to keep it practical. And above all, we're going to keep you on track. So the first question that I've been getting over and over, and really not from clients so much as the media, and that should tell you something right there, but it's a simple question. Will this shutdown hurt people's investments? Look, markets hate uncertainty, and governments throughout history have been a pretty reliable source of it. But here's what the data tells us. Since 1977, the US has been through 20 government shutdowns. Through it all, both stocks and bonds have shown minimal negative reaction. In fact, during the shutdowns, the S&P 500 has risen 55% of the time. And as of the taping of this video, that is holding true to form. Let's talk about the last record holder, the 35-day shutdown of 2018 to 2019. The S&P 500 was up 10.3% over that same period. Even better, 1 year after shutdowns end, the S&P 500 has been higher 86% of the time, with an average 12-month return of nearly 17%. Now, all of that sounds pretty good, right? Well, history is only a guide. It's not a guarantee. So let's pause for a second. Headlines make shutdowns sound like the market is teetering on the edge. But history, as we've just seen, and I mean recent history, not ancient Rome, says this too is likely to pass. The real risk is not the government shutting down. It's panic selling at the wrong moment. It's abandoning your investment plan or trying to time headlines instead of sticking to fundamentals. Now, could this be a market-shaking event? It could, but a lot more would have to happen than just shutting down the government. The second concern I hear all the time, especially from retirees and near retirees, and it comes down to this. Will my Social Security, Medicare, or federal pension or other federal benefits be affected? Well, let's clear this one up fast. Social Security, those checks are going to continue to arrive on schedule. Medicare and Medicaid, they keep running. They're funded by payroll taxes, not subject to annual budget drama. VA benefits, no interruption. If you're a retired federal employee, your pension payments are mandatory spending. That means they're protected, even during shutdowns. Your federal health coverage continues too. And for those still working in the federal government, yes, some employees are furloughed, and some work without pay during the shutdown, but all are typically guaranteed full back pay when it's over by law. Now, one wrinkle in this round. OMB, the White House Budget Office, is instructing agencies to cut certain positions permanently. Now, that's a workforce story. That's not about your core benefits, but it's worth being aware of if you're still in service. It's also worth being aware of for the future and how it might crimp consumer spending. So let's bottom line this. Your retirement income stream, Social Security, and your federal annuity, that remains uninterrupted. If you've planned around these pillars, this shutdown shouldn't cause you to worry. But if you're feeling nervous about it, this is a great time to review your risk preference versus your risk capacity. Fancy words, but risk preference is just about your emotional and psychological comfort with risk. Risk capacity is about your financial ability to bear it. If you don't know either of these numbers, or you don't know one of the two, now is a great time to review both. Just scroll down to the description in this video, and you can find out your numbers by following the link that I've provided. Follow that link, fill out the survey, and we'll send you a complimentary report comparing your risk numbers so you don't have to wonder. Finally, I get it. No one likes feeling out of control, especially with their finances. So the question is, what now? What steps should you be taking as shutdown news dominates the airwaves? Well, here's my checklist for moments like this. First of all, check your risk tolerance, your risk preference, and your economic ability to accept risk. Shutdowns tend to spike volatility, and sometimes they can do that more than you'd like. So if your portfolio swings and you have an uneasy feeling, use this as a stress test. Are you truly comfortable with the risk you're taking? Let's make sure you're not set up for sleepless nights. Next, don't time the market. It's time to review your strategy instead. The urge to do something is natural during these periods, but almost never productive. Study after study and reams of market data show that missing just a handful of the best market days can leave you much worse off than simply riding periods like this out, if indeed it even turns into a volatile period. If you're still working, keep saving. If you're retired, be sure withdrawals are in line with both long-term growth and short-term stability. This is a critical window for near retirees. If you're close to retirement, volatility right before or just after you've quit working can have outsized effects. Sequence of return risk is real. If you're in that window, now's the time to revisit your withdrawal rates, ensure you have an adequate emergency fund, and double check your cash reserves. Preservation is often the name of the game, at least in the first couple years of retirement when you're most sensitive to some type of financial pullback. Stay informed, but not overwhelmed. You don't need minute-by-minute updates, but you do need to know if anything truly changes with your benefits or in the tax landscape. So you have to rely on credible sources, not just anyone with a Twitter handle or hopes of going viral on Instagram. And that means work with professionals. If you're not already, make sure you have a trusted advisor in your corner to help you align your strategy with the realities of the market and any upcoming policy shifts. Shutdowns are a reality, but panic is not a plan. Adjust only when your goals, needs, or risk tolerance change, not because the headlines are temporarily louder than usual. If you need help, schedule a no-obligation Zoom meeting with me below. And let's make sure your retirement income planning is up for whatever comes next. Okay, let me bring this home. If you're only going to take 3 ideas from this presentation. First, shutdowns make for big headlines, not big market disasters. Second, your Social Security and federal pension, they're not on the line here. And third, planning beats reacting every single time. If you want more about the shutdown and what it means for you, just text shutdown, all one word, to 239-567-5477. That's shutdown to 239-567-5477. And I'll send you a copy of our free report, Government Shutdowns, Preserving Your Retirement. For more, check in with us at www.victoryindependentplanning.com or reach out with questions directly to me. That's Patrick at victoryindependentplanning.com. I'll see you next time when I'll give you 3 more things to consider for your retirement, your investments, and your financial plan. Goodbye.